Bitcoin's 2-week-long downtrend is coming to an end. Will Bitcoin push back to the prior highs at 70k, or will the bears reclaim control? What is the weekly candle looking like, and how are the macro charts shaping up? These are questions we're answering in today's video. Let's dive in. Okay, MegaWhale team, welcome back to the channel, guys. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are going to be going over Bitcoin's price action in massive detail, discussing the short-term charts from a structural and a technical perspective, discussing the key levels you need to be paying attention to, and our exact price targets based on the current breakout of the 2-week-long downtrend. We'll also be discussing the weekly candle close and the significance of this weekly candle close, what it means for the macro price action, and what you should be paying attention to on the high time frame charts. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to our group chats, our trading chart and education chat, our general chat, our trade setup, our help, our daily video, and our news chat. If you're interested in getting access to all of that, go ahead and contact us in the pinned comment of the free channel. For more information, you can go ahead and click those links. Let's dive right into the video. So like we said, a very big video today, as in 15 minutes time, that weekly candle close is about to occur. And as you know, the weekly candle is something that we've been tracking now for the last few days, as it is pushing between, above, and below a very critical level on the macro charts. That critical level being the 65.5k level, which is the weekly high of the prior bull market, and the 69k level, which is the all-time high reached in that 2021 cycle. Bitcoin has broken out of that downtrend we've been discussing in yesterday's video, that 2-week-long broadening, expanding wedge, that descending expanding wedge toward the upside, and we're going to be discussing exactly what to expect from this move today. So let's go ahead and get started on that market data. 24-hour volume is sitting at 141 billion. 24-hour liquidations are up 31%, sitting at a total of 160 million. Of the 160 million, 95 million coming from short positions and 65 million coming from long positions. Again, this goes ahead and tells us within that last 4-hour period, we can see 43 million coming from shorts, telling us a lot of people were hedged toward the downside as Bitcoin recently broke upwards from this expanding wedge, liquidating a whole bunch of those positions. Again, if you recall back to our videos this week, we were telling you very clearly, it is unwise to expect the price action to break down while we are sitting above not only a high time frame diagonal uptrend which has lasted 2 months, but of course a macro area of high time frame support at 60k. We were telling you the probabilities for a breakdown probabilities for a continuation upwards significantly outweigh the probabilities for a breakdown whilst these two levels of support hold. Okay. So let's go ahead and jump over to the broader markets, and then we'll come on back to Bitcoin. So moving over to the DXY, we can see the DXY is still in this gradual uptrend. Again, it has been an uptrend now for a couple days, ever since it broke out of this 2-month-long downtrending diagonal resistance. We are expecting that uptrend to continue into this upper range. We're looking for the high retest around this 104.5 to 104.8 level. So we are expecting we're relatively close to the top of this move. Before then, we expect a correction back on down. Moving over to the S&P 500, again guys, looking fantastic, sitting at a price of $5,291. While we remain above this black line, which is our 5,100 trigger point, we are expecting this continuation upwards. If we do lose this area of support, we would expect a correction to retest our 5,000 psychological support, which again would act as a high time frame bouncing point, and only if the $5,000 level is low lost, would we flip the high time frame trend bearish, retesting that prior high? So regardless of what happens in the short term, whether it be a short-term healthy correction or a slightly extended correction, we are still looking for macro continuations upwards while these levels hold as support. Exactly the same thing goes on the Dow Jones over here. We have again broken above that $40,000 level temporarily, have not closed a weekly candle above that level yet, with 3 days and 22 hours remaining on the weekly close for this market. We are sitting at $39,832. Again, the key trigger points for the short term is 39,000. A break of 39,000 results in a short-term downtrend to 38. A break of 38 results in a higher time frame downtrend to retest the all-time high. Provided either of these levels are retested and hold, we expect a macro continuation upwards. Okay, guys, let's go ahead and jump over to Bitcoin as we have a lot to discuss. So a quick word from Bitget and BingX and we'll dive on in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and move over to Bitcoin's price action. So starting on the short-term charts. As you know, Bitcoin has been in a downtrend now since. We're looking back at the 14th of March. So we're looking at around about 2 weeks. We're looking at about 11 days to be specific. This downtrend was quite a large downtrend in terms of percentages. We saw a breakdown from that 74K level all the way down to retest $60,000, wiping off around $14,000 in the price of the asset. So a considerable downtrend for Bitcoin. However, as we said in yesterday's video, we had a few indications that Bitcoin was not in that danger area yet, and we would only be expecting a correction further if we were to lose our 2-month-long uptrend, which we have retested back in February 7th, February 27th, and recently on the 24th of March, and our high time frame support at 60K. We told you guys while we were moving into support within a consolidation, a momentum was moving back upwards, there was a greater probability that we would see a reversal upwards and an eventual break of this expanding wedge and continuation, then a move downwards. And a lot of people were expecting, I felt like at one point I was the only person here telling you guys the facts, saying that support is support, the trend is your friend, expect a continuation while strength is still relevant on the charts. While most people were expecting 50K, 52K, 54K, we were sitting here telling you guys how it is. And I comes back to this main point I always talk about. The price itself of an asset can be very deceiving. Do not judge where the price of an asset is going to go based on what the price is. Have a look at the strength. What moves the asset price? It is buyers and sellers. So we're not analyzing the price of the asset, which is a consequence of the buyers and sellers. We are analyzing what the buyers and sellers are doing, more specifically, the shifting strength, the tug of war, the pull and push between the actions of the buyers and sellers to infer possible future outcomes for the price action. So if you're looking at current data, if you look at price action data, you can always be deceived. If you're looking at leading data such as momentum, it is very easy to get a more comprehensive understanding of what the actual strength of the market is doing, while eliminating the potential emotional biases that can come from the visible look of what the charts are looking like. You hear a lot of people saying, I think the charts are going to go down because they look bad, or it looks like it's going here, or it looks like it's going there. It doesn't matter what it looks like. What is the strength suggesting? So when we're looking at this price action, when we're analyzing what is happening on the chart right now, we can see a few very important things. Number one, we have seen a structural break. Number 2, we have seen a trend break. And number 3, we have a validation that we have positive strength. So we'll go through it. Strength, we have got that RSI breakout. We told you guys in yesterday's video, we have this RSI downtrend. We take this from the bearish divergence of the current structure. So we're looking at the cluster of price action over here, which relates to the cluster of price action on the RSI. We take our bearish divergence, so 0.1 to 0.2. This is our bearish divergence, 0.1, 0.2. We drag that trend across. This is going to be reflective of the current trend of which momentum has been moving in within the price range from our first point to our current range of price action. We have been in a downtrend. The momentum has been falling. However, we broke above this trend line, signifying for the first time we have seen a positive momentum shift. And with positive momentum, we see a shift or a move in price action toward the upside generally. With that move upwards, we have broken through our structural formation, which was our descending expanding wedge, which is a bullish pattern, okay? And our trend, which is our downtrend, this downtrend which we can see visibly created by our lower high levels, lower high, lower high. So with that, we have broken out of the trend. So let's discuss now the possible targets for this move, do a technical analysis, and then also talk about the potential risks of what is happening on the chart and how the bears could actually take back control for worst case scenario. So we're looking at the chart from a structural perspective. We have our next resistance sitting at the key level of 69,000. Now 69,000 is not only a major short-term resistance. We can look back on the short-term chart. We saw 1, we saw 2, we saw 3, we see 4, we saw 5, we saw 6 rejections from this level just within the last 20 days alone. So it's a major short-term area of resistance, but alongside that being a resistance in the short term, it is a major level of resistance on the macro as it represents the 2021 all-time high for Bitcoin at 69,000. So it's a macro resistance as much as it is a short-term resistance. So there's a heap of resistance over here that we would need to break through. So if we do see a continuation up to this range, which is very likely provided we remain above the downtrending diagonal resistance of this expanding wedge, this area will be a very key trigger point for either a continuation higher or a potential rejection again. So let's go ahead and talk about the possibilities for a continuation higher. If we take a look at our RSI again and the cluster of price action, we have got this solid black line, the upper black line. This is going to be again our initial bearish divergence upon the breakout of the 60K range right over here, dragging across downwards. This is going to reflect the entire degree of momentum within the range of price action since the 60K break. We can see momentum is still negative. So while we have negative momentum, it is unwise to expect the price action to break above the 74K range, provided the RSI has not done so yet. So if we do see the RSI break above this level, we would then expect that continuation up into 74. Until then, the highest we would expect the price action to go before would be 69K, and therefore we should expect 69K to act as a short-term level of resistance, and only to expect that level to break if we were to see a positive shift on that RSI, guys. If we look upwards again, we can see on that VIPV, we do have a slight gap in the VIPV until around 72,000, which tells us a break above 69,000, we would be starting to decrease volatility as we approach that 72 to 74K range, where we could potentially find an area of resistance. So again, we're looking at this low historical resistance range between that area of 69 to 72. We'd expect volatility to pick up, maybe a larger green candle, maybe a quicker move, only to find an area of resistance between 72 and 74K, which we would need that momentum to flip positive again for us to continue through that level. So a lot is happening here on this short-term chart, overall looking fantastic. Let's go ahead now and take a look at the structural formation and do a measured move. If we do a measured move, we do a similar measured move as if we would do when we do a falling wedge. Now, opposed to a falling wedge, we have a expanding wedge here, and they are inverted. So generally with a falling wedge, we would see the price action move into the wedge, compress, and then move out of the wedge. So we assume, again, the move out of the wedge is equal to the move from the low to 0.1 within the wedge, and the 0.5 to the top or the end of the move is equal to that measured move that we would expect the price action to move into the wedge from. So if we just do a measured move from the high point to point 1 of the expanding wedge and apply that to an expected breakout point, that will give us a measured move range of 73,000, which takes us into our 73 to 74k resistance we have outlined on the chart, which validates, again, we have confluence between what the price action is suggesting in terms of strength, what it is suggesting in terms of horizontal structural resistance, and what it is suggesting in terms of our overall formation of which the price action is moving in. So this will be a viable target, again, if we break 69k and we have that momentum shift on the short term. Let's talk about the bearish case scenario now, guys. Actually, one more thing for the bullish case scenario. If we do happen to break above 74k, we would expect a large continuation upwards, potentially 75, 76, and even 80,000. So let's now talk about the bearish case scenario. And the bearish case scenario has not changed since yesterday's video, or the day before, whenever the hell the last video was. The reason being is because just like in yesterday's or the day before's video, when we talked about the bearish case scenario, the bearish case scenario was never actually valid as of yet. The validations of which we would need to see for the bears to take control remain the same, regardless that we have broken out of a short-term downtrend. For the bears to take control, we would need to see a loss of that 60k high time frame support, failure to find a support at our sell side liquidity, and only then we would enter this low historical resistance range, this VRPV gap, to around 52,000, or even this peak at 58,000. So again, for the bears to take control in the higher time frame, to push the price down much further, we would absolutely need to lose that 60k level first from a structural perspective to actually indicate the direction has weakened. And if you want to simplify the charts a ridiculous amount, let's go ahead and do that. This is what we would do. If we want to keep it nice and simple and just very easy to follow, you simply have this range of support. While you're above it, you're bullish. While you're below it, you're bearish. It is simple as that if you're looking at it from the most basic view you possibly can, okay? Another way to look at it from a diagonal perspective is while we're sitting above this 2-month-long uptrend, we would assume the price action would continue in this trajectory. This is a representation of the trajectory of price action over a period of time. So we would expect the price action to continue in that average trajectory of price action, provided the price remains above that trend. So a loss of that uptrend would also be quite bearish. Again, depending on when that occurs, if we lose the uptrend over here, that wouldn't be as catastrophic as if we had to lose it over here, as this area would still remain as a support level. Okay, so it takes us back to why that 60k is so significant. Let's now move over to that weekly chart, because in 55 seconds, we'll time this video very well, we have got the weekly candle closing. So let's move over. So the weekly candle closes in what, 46 seconds. You're reading it over here on the chart on the right. And as we can see, as we talked about in many videos leading up to this point, Bitcoin is in the danger zone. The danger zone is, again, the range between the 69k region and the 65.5k region. We've said many times, and we'll say it again, a weekly candle close above, okay, or below these ranges will most likely determine the directional move for Bitcoin over the coming weeks. Okay, so what does that mean? If we closed a weekly candle above 69,000, we would expect a continuation higher. If we closed a weekly candle below 65.5k, we would expect a correction back down to 60,000. While we sit within this range, we are very neutral on the higher time frame in terms of the price range between 69 to 65.5, okay? And on the short term, we are again within this chop zone between these levels, determining whether or not we're going to see that break upwards or an inevitable break downwards. So if we go ahead and show you again, the 69k region is this area here, the 65.5k region is this area over here. You can see how we've got confluence of that uptrend around that range, and we know that Above 69k, we see a continuation upwards. So we're in this decision zone. A directional break on the weekly above results in a continuation upwards. A directional break on the weekly below results in a correction back to 60,000. So a very, very important level we are currently going to be retesting this week. So that does now mean, since we have closed a weekly candle within this range, we've got another 7 days before the next weekly candle to decide where it is going to break. Of course, depending on what happens in the short term will determine the likelihood of a break above or below, meaning if we see those short-term bullish scenarios play out, momentum shift break, price breaks over 69k, the probability of a weekly candle close above 69k is significantly higher than not. If we see the price action break below the uptrend again, the probability for a break down from 60k increases as opposed to a continuation upwards. Now that is not all. If we go over to the macro charts, we know that historically, every single time we break above prior all-time high, let's take a look at it. The prior all-time high on the monthly chart, we enter that parabolic phase for Bitcoin, So historically, when we break that monthly candle above the prior all-time high, we enter that parabolic phase of growth. Now, for Bitcoin to close a monthly candle above, of course, closing a weekly candle above 69,000 would not hurt. It would increase the likelihood of that monthly candle closing as well. And in this instance, both in 7 days' time, we have the monthly and the weekly. It's going to happen on the same day. So the next 7 days, and particularly the next weekly candle, is going to be very significant as it will determine if we enter that parabolic phase or not. Another thing we are looking for, guys, if we look at that breakout, we see the 80 on the RSI breaks at the same time. That is indicative of high time frame strength. We would also like to see if 69k does break on the monthly, that the RSI has broken or at least testing the 80 point on the RSI. If we do a date range move from the point of which we break out to the all-time high, from the point of which we break out to the all-time high, we see 8 to 12 bars. On average, that is around 10 bars. Assuming we break out this month, that takes 10 bars from where we are. Average top is going to be around January. A potential late top could be around March, and a possible early top could be around November. That is what we're looking for a top range based on the current data we have. Thank you for watching, guys. I hope you have a fantastic day. We'll catch you in the next one tomorrow. We'll see you then. Cheers.